I suppose. Bro, you are straight up velour pimping today.
Dude, we are velour tequila today.
All right.
Talk about.
Hey, everybody. Welcome to Indiana Success Happy Hour. This will be a real estate edition. I'm Quinlan here from Daniels Real Estate.
Brad Niccum from Nest Mortgage Group.
All right. Yeah, let's hit it. What's with the velour?
Velour tequila. I love velour tequila. You know that?
I do know.
And we have my first single barrel velour. We just announced it not too long ago. We'll be coming
A
out.
Brad Niccum version?
Tasting tequila with Brad, batch 2, velour
What?
añejo. Should be available around next August to September. And we're really excited about it. But velour, it's a tequila with a purpose. Cristiana Mortan's the owner. She does so much for the community in Mexico, bringing water to San Pedro Los Landeros with the Gente Buena Foundation. Every bottle sold goes to help that foundation. You can buy it at drinkvelour.com, and it is a
Where
fantastic
else
tequila.
can you buy it?
Well, just recently, my friend Dave, who owns Lux Bev, is
Hi, Dave.
bringing velour to Indiana. So in December, it'll start to be distributed to local liquor stores and definitely some great restaurants. You can count on Tony's Steakhouse.
Oh, that's great.
We'll make sure that happens. So, yeah, cheers.
Well, cheers.
What are you drinking over there?
You know, I did forget a beverage today, and you've got a keg here of a beverage that I like, Play Hard from Sun King. Thanks to our friend Kevin and the people at Sun King. It's still a great beer. Go get some. It's basketball season. It's got Gene Katie on the bar.
Is it basketball season already?
Dude, heck yeah. We're like week 2 of college hoops.
Man.
By the time this show comes out, heck, we'll almost be in December.
I'm still watching football.
Well, it's still happening.
Okay. I wish
Lots of football.
I wish they didn't go over each other. Like, seems like basketball to me is too long. Pro basketball, definitely.
I 100% agree. Pro basketball and pro baseball and hockey are all too long.
How long? Is hockey going on?
Yeah.
I've never watched hockey.
Hockey started before pro basketball did.
Really?
Yes, and then they play. Stanley Cup ends in June.
How do they keep the ice from melting?
I don't really know. A bunch of hamsters running on wheels to keep the freezer going.
I guess that explains how Chris Chelios is selling his $60 million home in Malibu. I didn't realize people in hockey made that kind of money.
Oh my gosh, hockey players make crazy money.
I've never even watched a hockey game.
Do you watch soccer?
Good Lord.
You know who the most highly paid athletes are in the world?
Tennis players and Formula One drivers.
Soccer players.
More than tennis players?
Oh my gosh. Yes. Now, I say, oh my gosh, yes, sounds like it's immensely more. I don't know it to be 100% true, but I know Formula One drivers make a shit ton of money.
Yeah.
I recently heard something about Messi, who is on Miami in the MLS.
Yeah, he's good.
He was offered by, I want to say it might have been a Middle Eastern football team, $1 billion contract, and he turned them down because he ended up signing with Miami for, a huge chunk of money, but he has ownership in the team. He has he gets a portion of money from the MLS for broadcast rights and all of that. He has already made close to $1 billion in like his first 2 years in the league.
See,
it's crazy.
Okay, so I mean, this is controversial. I'm going to say something controversial.
No way.
Damn, I don't get mad at somebody like Elon Musk, who is creating innovation and truly changing the world to make the money he makes. And not just Elon Musk.
Oh, yeah.
But Bezos and Bill Gates and Paul Allen and Steve Jobs and what was Steve Jobs' guy's name that helped him? The guy that actually made everything. I feel so bad. Wozniak.
Thank you.
Right.
Wozniak.
He was actually the genius behind it. Right. So all of these people that have creating things that have really changed our lives. And should a guy playing soccer make $1 billion? I mean, I'm not mad at him. And yes, he should, because we live in a free capitalist.
Yes. So we're going to. When I was a teacher.
Elon Musk has to be like, man, I wish I played tennis and made what Novak makes.
When I was a teacher, and for the longest time, a comparison would be, the impact that a teacher has on society, the world, and all of that, and the minimal amount of money that teachers get paid for the work that they do. and its impact, right?
Yep.
And how is it that that person makes their tens of thousands of dollars a year doing that job, and somebody in the sports world who is providing entertainment is making millions and millions and now billions of dollars? How is that fair? Well, I absolutely don't fault the athletes for the money that they make. It's not their fault. As you said, it's the capitalist society that we're in. Somebody offers you the money, you're certainly going to take the money.
Sure.
It's not your fault that you play basketball. Now, do I think that that is right? I don't. And it's an entertainment, and I appreciate the entertainment that they provide. But I have a level or a limit that I'm willing to pay to see said entertainment.
Yeah, but you're also a season ticket holder to the Colts.
I am. But I have a limit. If
Sure.
if there was an amount that they raised my ticket prices to
You're
cover
out.
the salaries that they're paying, I'm out.
But their ticket, it does help cover that.
It does.
Yeah.
Absolutely. So, it would be great if teachers could somehow ask for advertising money for what it is that they do. And that's actually been floated out there as, something to do.
Well,
But
if you think of it this way, Tony Robbins, he's a teacher.
he is.
Tony Robbins makes a lot of money.
That he does.
Right. So maybe it's the difference of a government run institution where it's just placed upon taxpayers to pay a certain amount, and that's the budget we have to teach. I mean, there's a reason why teachers get paid X amount to teach at Indiana State University, and teachers at Harvard probably make more, or Notre Dame.
I've never looked at the budget for a state, but I have heard that education is more than 50% of the budget for a state.
Out of property taxes or total?
I think total budget.
Total budget.
And there's only so much money to go around.
Right. Yeah.
So what is a government institution to do when there's only X amount of dollars that they can spend?
Right.
Yes, teachers are valued. Teachers are valuable,
100%.
but so are police officers and firefighters and many other professions that benefit from the government money that they get to pay their salaries. But there's only so much money to go around, and we're always talking about cutting taxes and lowering taxes. And as a taxpayer, I appreciate that, but
as a non-teacher, as a taxpayer, like, cut that out.
It's an unfortunately no-win situation. But those who are paying for the Colts games and the Colts players, well, those are private organizations, and if people are willing to pay it, they're willing to take it in.
Yeah, I'm definitely not mad about that side of it, but
No.
it is when you look at it and you go, gosh, I'm mad at Bill Gates because he made as much money as he does. Yeah, I'm going to utilize something that he created every single day of my life that makes my life better.
Yep.
And I don't watch LeBron James play basketball, so it really hasn't impacted my life in the way that the income has for him. But for the people who love him, fantastic. It's the same for musicians, and it's all there.
Yeah,
right.
Absolutely.
It's all of that.
The entertainment sector.
Yeah.
If people are willing to pay it, those people are willing to accept it.
And just so you know, when it comes to entertainment, we're here to entertain you, but we are not being paid like Beyonce.
Oh, we are not.
Nope.
We're on our way, though.
I think we're on our way to internet famous.
I think 10 or so more subscribers. I think we're in
10 or more billion subscribers.
All right, you can quantify that if you want.
We kind of have to. Well, you said we're here to talk about real estate.
We are. This is a real estate edition. So recently in the news, and I don't know exactly when this will be on YouTube, so we're going to say at some point in the last couple of weeks, the idea was floated out by the president of a way to maybe stimulate the housing market because it is stagnant.
I don't know if it was as much to stimulate it as it was to make it affordable.
Okay. Which would hopefully stimulate
Sure.
the housing market. So he floated out two different ideas, and we're going to get as in-depth as we can about ideas that have not fully come to fruition. We'll start with the 50-year mortgage. That probably got the most publicity, in my opinion.
It got so much publicity that I was on the news.
Yeah, you were?
You should show a segment of that right here.
Oh, that's a great idea. I'm sitting next to a celebrity.
That was while I was playing.
Anyway, so you are on the news, talking briefly. It might be able to go
very
into
briefly because there wasn't a whole lot to talk
That's
about.
correct. So, what do you there's really nothing to know because, again, it was nothing more
it's a
than an
floated
idea.
It was like this,
But you've worked in the mortgage business for 30 years.
Yeah.
So you have understanding of how it could potentially work. So
I mean,
what do you think?
So take the positives. What are the positives? It's going to maybe potentially lower somebody's monthly payment, which
Yep.
would increase. Here's the thing that's most important: increase the amount that they qualify for.
Okay.
If we're talking about affordability, I get a customer that comes to me, I get them pre-approved, and they only can qualify for a $175,000 house, and I tell you that, and you go, ugh,
Oh, it's going to be a challenge.
it's going to be a challenge. But if I said, hey, I'm going to put them on a 50-year mortgage, that gives them an extra $180 a month in mortgage payment that they can have,
Okay.
right, or save, and now they qualify for a 225.
Oh, okay.
Can you find a 225 over a 185 or whatever I said earlier?
Not only are there probably more of them, but they're also probably in better condition.
So now we've kind of tackled the affordability issue potentially. You know, you got to think back to Roosevelt, right? When the New Deal came out.
Which one?
Teddy?
No, Franklin.
Franklin D. Roosevelt. I didn't know which one they were. There's Roosevelt. I just knew it was the New Deal. So the New Deal came out, and that's the first time the idea was floated of a 30-year over 15-year.
Okay.
And you think of how old we live to be today. I mean, I think the average age is like 110.
That's false, but it is oftentimes into the mid to upper 70s.
And back then,
it was not.
It wasn't. Yeah. In fact, I believe the reason they picked 65 for retirement age was most people didn't live to be 65.
Okay.
And Social Security could really sustain itself if everybody died at 63.
Absolutely.
Now they're living to be 105.
Yep.
It's more expensive. So when you think about what that change was back during the New Deal, when Roosevelt was president, it was what, 19?
It was in the 20s, I believe. I'll be honest. I don't know.
He was post.
It was post-depression?
Post-depression,
okay.
I believe.
So,
or at least was the New Deal was to get us out of the Depression, so the 30s.
Okay, yeah.
Was
sorry for you history buffs.
We you guys years. Put nasty shit in the comments. So that's the point, that the first time, hey, here's a thought of you could have a mortgage for 30 years. They doubled it. That'd be like, what if Trump came out and said a 60-year mortgage? Like, that's even further. But it may create more affordability.
You know, you had mentioned, well, where you were kind of going with that, I don't think you fully completed the thought, was what was the opinion probably back then? All the people, you know, in the news back then going, 30 years,
30
that's
years.
ridiculous. Who's ever going to pay that off? And, you know, you talk about the two sides of government.
Yeah, one side hated it, one side loved
exactly.
it. Same thing
Yet,
we got here.
back in the 30s, it would have taken months for that news to get around to the whole country.
Because the guy would have been riding on
That's right. Exactly. So it's got to wind up in the newspapers. Then the next day or two, it might wind up in the news.
Right.
Yeah. So
completely different, you know. And then today, you know, you have somebody just say, I think we do 50-year mortgages. And all of a sudden the news is like, ooh, what was that? Right?
Yeah.
And then you got a group going, that's amazing. Another group, well, that'd be horrible. What are the cons? Well, you pay a hell of a lot more.
That's where I was going to go with that. Yeah.
But, you know, we've talked about it. I've talked about it with a couple people. They're like, well, people won't ever gain any equity. Well, if you're going to buy a house and live in it for 3 to 5 years, you haven't gained enough equity to do anything. Right? Unless you did that in 21.
I'll say now,
when the homes blew up in price,
I would say the average to even the majority of people in 3 to 5 years haven't.
Right. Yeah.
Those who are paying extra on their mortgage every month, ideally, you know, they'll have maybe some equity.
It's a small percentage.
It's still a small percentage because you're basically paying interest those first.
Equity comes from the growth in value.
Yeah.
Right. 3 to 5% on average. We've seen 10s and 12s and even 20s, you know, over the last couple of years. So if that house is growing 3 to 5% and you're making your payment, if you're going to buy a house and you're looking to get in and get out in 3 years, that's not what investing in real estate is. And that's not what buying a home is. Buying a home is not like where you're renting and you're looking for the next lower payment or the next payment and getting out of it. Buying a house is investing in that house. You're going to live there. You're going to invest in the community. Your kids are probably going to go to school, and then your kids are going to be in that school and you're not going to move. And the average person keeps a mortgage for 7 years, and 7 years is a good number because of the way mortgage rates cycle.
Okay.
You know, if you look at rates over the last 15, 20 years, you're going to see 5 to 7 year cycles. Rates will be up, rates will be down, rates will be up, rates will be down. So what's that mean? When rates come down, people refinance. During COVID, I refinanced a lot of people from 30 years to 10 years. Their payment didn't change a lot, But now they're going to have their house paid off in 10 years, which is great because those people with those really low mortgages that don't want to sell, their house is going to be paid off in a few years. And they're like, shit, we want a new house. And they're going to move. And they'll pay cash for their next house,
Yep.
which is happening a lot today. So when you think of the 30-year, yeah, you're going to pay more interest, but people are going to still keep that mortgage an average of 5 to 7 years. When they go to sell their house, it's not going to be based on what they paid. Just like today, it's going to be based on how much that value's grown. So I don't see it as quite as much of a negative as some people, because I think it may help that person that doesn't qualify for what they want to be able to qualify for that nice
Absolutely.
house. But they still have to have the down payment and all those other things. But I also don't think this is a thing that we're going to see pop up and happen. There's, you got to create a mortgage-backed security for it. You've got to find investors. They're going to invest in those longer-term mortgages. You have to create a whole mortgage product. You're going to have to, create underwriting guidelines for it. You're going to have to, the government's going to have to come up with a way to back this bidding.
Yeah, I heard you say earlier it's probably 7 to 10 years away.
Well, my joke was in Trump's third term.
Yeah, there you go.
Which isn't going to happen.
I look at it from the standpoint of it actually being a positive thing, because number one, ideally, you're going to have lower monthly mortgage payments. Number two, whether you have a 15, 30, or 40 or 50-year loan, the majority of people never see the end of that loan anyway. So take advantage of the opportunity to get something at a lower monthly payment, knowing that in most likely 7, 8 years, you're going to sell the house anyways. And the new deal when you sell the house is going to pay off the rest of what you owe.
Or refinance.
Yeah.
Right? Rates come down, you refinance to a 15. Right?
Absolutely.
Because that difference in payment's not a whole lot, 150 to $200. I think that's the numbers you ran, went like 150 to $200 on a $400,000 house. So if you can turn around and refinance that because rates came down a point, and refinance into a 30 and keep the same payment, or refinance into a 15 and keep the same payment, now you're accelerating that payoff. And some people do stay in their house.
Some do. Yeah.
Right. And have their mortgage paid off. Most people do not.
Yeah.
So
correct.
I don't think it's a really super negative thing, but I also don't think I'm not saying it's the savior of affordability.
Yeah.
I think a couple things that would help with affordability is states need to get on board with changing property taxes and removing property taxes.
That's a very popular thing being floated out.
There's a lot of states that don't have property tax. Yeah. And let's make it a sales tax instead of property tax based on what you buy. And then people who are elderly who have paid off their home can actually own it, because property taxes probably hurt more people that are in a fixed income situation. But also affordability helps, because that's another $150 to $300 a month in the payment that you have to make to afford that home.
True.
And then also maybe regulate insurance a little differently, because insurance has gone up as fast, if not faster, than home prices. Some people have seen 50% increases in their insurance premiums. So that's another $200 a month of your home payment. So there's maybe other things that can be done as well. The insurance thing is kind of hard because that's dealing with capitalism, and I'm not one that wants to cut the knees off capitalism, but insurance companies do have the biggest bills.
You have recently paid off your house.
Yes.
So now you're in the same boat as me. Oh, I don't have a monthly mortgage payment. And then, April rolls around. Here, thousands of dollars you owe in property taxes. I'm like, oh, crap.
Yeah, and that's not a little number.
No, it's not.
I mean, it is if you live in the
and it's April, and then again in November. So
it's actually
you're right. It's the bill comes out,
but you start getting hit.
Yeah, you do. So
and then whenever your homeowner's insurance, that was actually a joke Tony and I made. We're like, oh, we have to make our own insurance.
That's correct.
Yeah, that's the thing. But still a better thing than making a monthly mortgage.
Okay. The other news potentially floated out is one we know nothing about.
Nothing.
But again, being in the mortgage business for a while, maybe we could talk about what we think it means.
It's a hard one.
The idea floated out is portable mortgages. So basically, one of the things that's killing the housing market, and has been for 2 or 3 years now, are the people who refinanced back during COVID times down into an interest rate of 3.5%, 4%, something really low.
2.1. I did 2.1.
Oh, good Lord. So something really low. And now those people are reluctant and have been for a few years to want to move into something else because they're going to jump from 2.1 up to potentially a 6.5. We've had 7.
5, 7.
I mean, anything that's, double plus what they're paying now. I mean, I can see why people wouldn't want to move as quickly. So the floated idea was portable mortgages. Whatever mortgage you have now on your house can go with you onto the next house. I
How's it
I
even
have
work?
not read any articles on this, but same question. How the hell would that work?
Well, so it is a thing in Europe,
Okay.
along with Japan has the 100-year mortgage.
Oh, okay.
But those people live longer.
Actually, I'm going to come back to that, but go ahead.
So they supposedly in Europe, when you get your mortgage, then your mortgage transfers to another property when you buy a new property.
Okay.
So my question is, if you have a $100,000 mortgage, you owe 20,000 on your house, so you have 20,000 equity, and you sell your $120,000 house, and you want to buy a $250,000 house. Now you only have 100,000. So does that mean you had to come up with another 150,000 down?
Yeah, exactly what I was thinking.
That makes it not work. That really makes it as irrelevant as assumable mortgage, right?
Yeah.
We love putting in the MLS assumable at 2.5. As long as you have 150 grand to
That's
buy
right.
it, right? It's like
You got the
it
rest.
never works. I've had one person that I know of in my entire 29-year career that their brother was willing to sell the house to him at the cost of whatever the mortgage was. So he assumed the mortgage and had no money out of pocket, which is great. That's brother to
That is
brother.
the perfect
That's
thing to
the
do.
scenario that makes it work,
Mhm.
right? Or if a divorced couple is going through an issue and they need to assume that mortgage to stay in the house, right? FHA, VA, and USDA loans are assumable, and that spouse now can keep the house. That's a great opportunity. But when it comes to I'm going to sell my house with an assumable loan, that makes it difficult, and that's what makes me think the portable loan would be like, because if the loan is based on what you currently have, I don't see how you could expand it to be something different. But I haven't looked into how they work in Europe.
And you think about what it takes to get someone approved for 3%, right?
Right.
Well, now if they can port that 3% onto something else, but need to beef it up from 100,000 to a $250,000,
Are they still be higher?
are they still qualified at 3%?
Who knows? I mean, that's how the hell's even? It's a great idea. Like, I would love to port my mortgage onto the next house. My interest rate right now is 0.
Right.
I don't.
That's another question. What about people like us whose homes are paid off? How does that work? Other than I can just take the entire.
We get screwed out of the new rate.
We kind of do.
I think people put too much thought into interest rate when they buy a house. No, it's the only thing that we talk about.
Yes.
It is the only thing that you talk about what the rate is. When you buy a car today, you buy the car based on the payment, right? All the marketing is this new Bronco's got a $439 payment.
Right.
You don't even know how much it costs.
Nope.
You don't know what the rate is. It's just the payment.
Can I make the payment?
And then school loans, we don't talk about interest rates, how it's going to damage you in the future. You're going to go to this $100,000 college and we're going to get you a loan and you don't have to pay a payment right now. Right.
Not until 6 months after you graduate.
But then people go like, well, I don't want to buy a house because the interest rate's 7%. How about you don't want to buy a house because that $139,000 house 10 years ago is now $435,000. That's really more the reason. But instead, we get hung up on the rate.
Yes.
So if we did more like we do in the car industry and we sold homes based on payment, would we sell more homes? Like, should realtors market the house? It's like, this house has a payment of around $2,200, not that it's $300,000.
Are there not rules around us being able to do that? Advertise like this?
You break all the other rules by saying interest rates are this percent. You're not allowed to say that either. I don't know.
Huh.
That's a good question.
Yeah.
Because to me, if you marketed payment, if people could get in the MLS and look at payments, which is what they do on Zillow today, everybody calls me on based on the payment they've seen on Zillow, but Zillow doesn't include the proper amount of taxes and insurance. They also hide in the fine
print.
print that is, you're an 800 credit score first time home buyer with an AMI under 80%, putting down 40%,
Woo,
or
hello.
some crazy number. So it drives your payment down really low. So they sell payment online,
Hmm.
but no one's going after Zillow.
Well, of course.
They're the big machine.
Of course.
And this is an offshoot. I'm going to tangent. Have you heard that Zillow may be in line to purchase Keller Williams?
Well, that Keller Williams did recently sell. I heard that. Not 100% of their business, but
So Zillow
Huh.
just had their big on-staging conference just a few weeks ago,
okay.
and it was floated at that meeting that Keller Williams may be purchased by Zillow.
Well, that would be interesting.
That's just a giant wow.
Yeah. Huh.
But with volume being down, and all these realtors that hate Zillow that
I know.
that have been
That's
paying
exactly what
them
I'm
so
thinking.
much money for all these years are now going to end up working for Zillow.
Wow. That's
Don't know if it's a thing. Put it in the comments if you've heard it. But I read a whole bunch of stuff after the conference was over that's a thing floated that Zillow may try to overtake Keller Williams.
very interesting. So I said I'd come back to this. When we were in Dallas and listening to Tom Ferry speak,
Mm. Tom Ferry or Tim Ferry?
no, it's Tom.
Is Tim Ferry a guy too?
Tim Ferriss is a guy. He's an author.
Okay, Tim
Yeah.
Ferriss. That's the 4-hour workday.
Yeah, that's Tim Ferriss.
That's the guy that's our Jay Bear.
Yeah,
Hey, Jay.
hi Jay.
That was Jay Bear's buddy.
There you go.
Okay.
Tom Ferry is a coach. Many of his clients are realtors, and
Jay probably knows him.
there's a good chance.
Yeah.
He's huge in the business coaching world. Anyway, he said that within 20 years, we are going to see the real estate market in America go towards more of a European and global market, meaning what you said about the 100-year mortgage in Japan, maybe not 100 years. He did not give a specific number, but the idea that real estate becomes a legacy that you are leaving for your family, that when you buy a home, it's with the idea that like everybody on the family is on that loan for the house, and it is just passed down from generation to generation. So you don't find as many, single family homes being resold because it just passes on down and it just keeps getting paid off by the family over time. And one of the things that I had read in regards to the idea of a 50-year mortgage was that exact scenario, in that realtors are going to have to change the way they do things if this becomes a thing, because you're not going to have as many yearly sales of single family residences because they're just going to pass down. So you become the family advice giver.
But take that to the fires we had in the Palisades in California.
Okay.
Most of those homes, or a lot of those homes that burned, were generational homes.
Mm.
When you hear those families talk,
Yeah.
And you think about that, you have working class
Collar.
working class blue collar people living in homes that cost an average price of 1.2 million.
Mm-hmm.
And a lot of them lost their homes. And one of the things that was an issue is they didn't have insurance.
Oh.
Why'd they not have insurance?
Go.
Because they didn't have a mortgage.
Mm-hmm.
And it's grandma's house,
Yeah.
great grandma's house. And now you have, 2 generations of people living in these homes because people can't afford those homes on a regular basis. You can't buy a house in Riverside
For real.
if you're working as a Jiffy Lube oil guy, buying a $1.2 million house that's a 1,300 square foot home. So when you take these areas, and California is a great, place to look at, where home prices have grown so much and it's hard to live there, and everything's higher in California.
Yeah, it is.
Everything's bigger in Texas. Everything costs more in California. I think that's the truth. So when you look at what happened with the Palisade fires, and also the other neighborhood that was mostly Hispanic, that happened in those same fires, I can't remember the name of it.
I got nothing.
Same there.
Oh,
multi-generational.
Yeah.
Generations of families living in those homes.
Yeah. That's a cultural thing for them.
And now you lose that, and they lost everything. That is a future for America. That is,
just become more prevalent nationwide.
right,
as
because
opposed to
now
pockets.
it's more expensive. So,
Yeah.
mom and dad are going to buy this house with their their children. They're
Yep.
going to live in the house, and then that's going to be handed out generationally. And now that 50-year mortgage doesn't seem as crazy,
For sure.
but it's a shame that that's where home ownership has gone and affordability has gone. And hopefully, over the last 12 months, we've actually seen incomes rise quite a bit in the
Always
United
good.
States, and prices have leveled in a lot of the aspects of inflation. So
Homes have definitely leveled.
yeah, car prices have actually made a little bit of slip. Used
That's
cars have
good.
made a little slip. We've seen interest rates in a lot of areas making a little bit of a slip. So now maybe we're seeing affordability become, a little
I have
easier for
seen
people.
a headline recently about affordability was, had come down and had been the best it had been in, I don't know if it was months or years, but either way, I didn't believe that to be true about our area necessarily, but it's good to see, that kind of headline.
I've seen some things where there's some things that affect the super wealthy
Hmm.
and then the incredibly poor have in common, but the middle class misses out. There's a
Oh.
couple of things like that.
Okay.
Outdoor showers.
Okay.
If you're really rich, you've got a house by the beach and it's shaded and you have an outdoor shower.
Yeah.
But if you're poor, that's like a hose behind a building.
You've got an
It's
outdoor
completely
shower
different.
wherever you can find one.
Another one, something that helps the poor that greatly affects the wealthy, increase in the minimum wage.
It's true.
Yeah, it helps the poor, but greatly affects the
Yeah.
higher wage people. So there's a couple of things that off the top of my head.
Okay. Interesting.
The outdoor shower one.
That's a good one.
I was looking at some homes that in Mexico to stay in. It was like, oh, that has an outdoor shower. That's $5,500 a night. I could be a homeless guy and standing outside of a Bigfoot gas station, which don't exist anymore. Yeah, that's just a thought.
All right. Well, good episode, brother.
Appreciate you.
We appreciate all of you folks out there who stayed with us for this episode. If you have any questions about the 50-year mortgage and portable mortgages, we can certainly research and find info for you. Just drop it in the comments. We'll see you next time on Indiana Success Happy Hour. Cheers.
Cheers.
It's Brian and Brad, grab your seat. Real talk served with a boozy beat. Tune in, don't even blink, 'cause real estate makes us drink.